Being in the 1% of income earners in America, I pay a lot of money in taxes. Well, I used to. Without doing anything different in my businesses, on this video, I'm going to show you a legal IRS tax loophole that will take my combined tax rate from 50% to essentially zero, which means I just doubled my income. And best of all, anyone can do it. So whatever tax bracket you're in, you can take it to almost zero, just like me. It's called Act 60, and I'm going to break it down for you coming up.
For a limited time, you can get a free copy of Jerry Norton's Quickstart Kit with everything you need to flip your first house in 30 days or less. Download it now at myquickstartkit.com.
If this is your first time here, my name is Jerry Norton, and I've been a full-time real estate investor now for over 17 years. Among other things, I specialize in flipping houses all across the country, and I've helped thousands of new investors get into the game of flipping and create 6- and even 7-figure incomes. If you want to learn how to flip houses so that you can live your dream life, be sure to subscribe to my channel and click the bell icon to get notified when new videos are released. Becoming wealthy is not just about creating income. Although important, it's never about how much you make, it's about how much you keep. And the way the tax code is set up in America, as your income goes up, so does your tax bracket. The more you make, the higher the percentage you owe in taxes. Trust me, I know all too well. My combined federal and state income tax for 2020 was $1.4 million. Not taxable income, but actual taxes owed, which, to put that in perspective, it takes an annual income of approximately $539,000 to be among the top 1% of income earners in America. That means I paid in tax almost 3 times the income of the 1%, and that was after deducting as many business expenses as I legally can. Currently, as of this recording, if you're married filing jointly, once your annual taxable income reaches approximately $628,000, you are in the highest tax bracket of 37% for federal, and depending on your state, you could owe another 5 to 10%, putting you close to 50% in combined income tax. And it's only going up because the other 99% don't give a damn about the 1%. The Biden administration has already stated plans to raise taxes even more on the rich. Some speculate the highest tax bracket is going from 37% to 49%, which means combined with state income tax, the 1% of income earners could be paying 60% of their income in taxes. Now, I own several businesses and my primary income comes from real estate investments, in particular, flipping residential real estate, which I talk about extensively on this channel. The great thing about flipping is once you learn how to do it and you get good at it, you can make a lot of money very quickly. That's the good news. The downside is income from flipping is taxed as ordinary income, which is the highest taxable income. Unfortunately, you don't get any tax incentives for flipping houses. Recently, I did a video series here on my channel talking about why I pay so much in taxes from flipping and how most wealthy people at my income level try to offset their tax liability by purchasing long-term assets. One of the main reasons why they're rich by assets is because the IRS tax code allows for a non-cash depreciation tax write-off for qualifying assets. For example, I have a close friend who is a real estate investor, but unlike me, he purchases and holds a lot of real estate each year, and by so doing, he creates massive depreciation tax write-offs. So much so that his income last year was $2.5 million and he didn't pay any taxes. Now, if you want to learn more about how to offset your taxes by acquiring long-term assets, be sure to watch that video where I break it down in detail. I'll put the link to that video in the description below for you. But I personally don't want to buy, own, and manage a lot of assets. I personally hate rentals. I don't want the distraction from what I'm really good at, flipping. So for now, at least at this point in my life, I strategically chose not to buy assets and instead show a lot of taxable income and pay a lot of taxes. Most would argue that at my income level, that is a foolish decision, but I just don't want to make time and space in my life to acquire and manage long-term assets solely for tax incentives, which brings me to what I believe is the perfect solution. Puerto Rico, Act 60. Now, if you don't know about Puerto Rico Act 60, let me explain. Because Puerto Rico is a U.S. territory, In an effort to boost their depressed economy, the IRS offers huge tax incentives to mainland Americans if you move your business to Puerto Rico and become a Puerto Rican citizen. Essentially, if you qualify for Act 60, you pay 4% income tax and 0 capital gains. Are you kidding? That is huge. You pay 0 capital gains tax and only 4% income tax. That means for me, I would go from currently paying 50% of my income in taxes, which will probably soon become 60%, equating to millions of dollars, to hardly paying any taxes at all. And I'm all in. I'm moving my business and my family to Puerto Rico May 1st. But moving to Puerto Rico was not an easy decision, even with the huge tax savings, because I have 10 kids. My oldest has moved out and my 18-year-old is about to leave on a 2-year church mission, which means I'll be leaving my beautiful 11,000 square foot house in Arizona, our friends, our family, our community, and moving to basically a third world country with my wife and 8 kids where we don't know anyone. That is just insane, but we have always been an outside the box family. We homeschool our kids. Years ago, we traveled the country in an RV full-time for a year. We've moved a lot over the years, and we love to travel and explore. And each move has pushed us out of our comfort zone. And as a result, we've had tremendous growth in our marriage, our family, and our businesses. And although there are so many unknowns and it's pretty scary, Puerto Rico is going to be another amazing opportunity for growth, and we feel God will bless us and protect our family. As I've prepared to move my business and my family to Puerto Rico over the past month or so, I've become somewhat of an expert when it comes to Act 60. So let me share with you what I've learned, and who knows, maybe you'll move to Puerto Rico too. There are 3 main things that you have to do to qualify for Act 60. First, you have to set up a Puerto Rico entity and start transacting business from that Puerto Rico entity. Now, you can do business to the mainland, but you have to operate that business from Puerto Rico. That one is easy for me because I currently run all of my businesses, including my real estate deals, virtually from my home office in Arizona. So all that will really change for me is the home office will be Puerto Rico home office instead of Arizona home office. Number 2 is you have to establish residency in Puerto Rico. You have to physically move to Puerto Rico and live in Puerto Rico. And the IRS is taking this rule a lot more seriously than in the past. Last year, they instituted what's called a closer connection rule. Basically, you have to sever ties with the mainland and become a Puerto Rico citizen. For example, rent or sell your home in the mainland, get a Puerto Rico driver's license, go to school in Puerto Rico, cancel all your memberships on the mainland, etc. One of the big rules is you have until year 2 to buy a home in Puerto Rico. The closer connection rule is a little vague, but the point is you have to transition your life to Puerto Rico. Yes, you can come back to the mainland, but if you come back for more than 30 days at a time, the IRS could claim any of that income earned working while on the mainland during that extended stay as taxable on the mainland, defeating the whole purpose in the first place. So the minimum residency rule is 6 months and 1 day, but if you spend more than 30 days at a time on the mainland, either don't work during that time or get taxed for income earned during that time. Now, I'm going to play it safe and spend about 8 months a year total in Puerto Rico. Now, luckily, the IRS is flexible on the first year, which they call your entry year, to allow you time to make the transition. And the third rule to start on the clock and start receiving the tax incentives is you have to submit your Act 60 application to the IRS. Now, with COVID, I guess it's taking the IRS like 6 to 12 months to approve what they call decrees for Act 60. But as long as you set up your Puerto Rico entity and established residency for at least 6 months and 1 day, you'll qualify for the tax incentives retroactive from your application date. But here's the big kicker, and it's a big one. Are you ready? It's a minimum 4-year commitment. If you don't do it for at least 4 years, the IRS can do a clawback and you'll owe all the taxes. Now, this is not for the faint of heart. Don't do it unless you're prepared to live in Puerto Rico for at least 4 years. So here's my plan. I'm moving to Puerto Rico with my family May 1, which is in 2 weeks from this recording. With the help of a specialized legal team, I'm setting up my Puerto Rico entity and banking, and we'll start transacting business from my new Puerto Rico entity starting May 1, and I'll also submit my Act 60 application by May 1. So I'll be on the clock May 1. That means for this year, 2021, starting May 1, my ordinary income will be taxed at 4% and my capital gains income will be 0%. Then I'll continue at those rates for the following 3 years or however long I continue to do it. So I already sold my 11,000 square foot house here in Mesa, and my plan this year is to come back to my Montana Mountain Lake house for the month of July and December. Next year and each year after that, my plan is to come back to Montana for June, July, and August and plan ahead so that I don't work during those 3 months, and that way I'm not taxed during that time. And then again for the month of December. Like I said, that will give me 8 months total in Puerto Rico. And we're moving to a resort community called Palmas del Mar on the southeast side of the island. Now we found a house and we're buying on 3 acres with a view of the ocean, and our closing hopefully is June 1. Now I want to explain how flipping real estate works under Act 60 from Puerto Rico because it's a little tricky. If you buy and sell a house on the mainland, the income earned is taxed on the mainland. There's no way around that, so here's how I'll continue wholesaling and flipping houses on the mainland from Puerto Rico. See if you can follow me here. My US-based entity that flips houses will remain on the mainland and will be taxed on the mainland. However, my Puerto Rico entity will provide consulting to my mainland entity. The consulting fees will be an expense for the mainland company and reported as income to my Puerto Rico entity, taxed at 4%. So for example, mainland entity buys a house for $50,000 and spends $25,000 rehabbing the house and then sells it for $150,000 in 90 days, and after financing, commissions, and closing fees, etc., shows a net profit of, let's say, $25,000. That $25,000 is now subject to tax on the mainland, but wait a second, Puerto Rico entity consulted the mainland entity for everything from acquisitions and analysis, budgeting, rehab design, raising funds, marketing and sales, etc. In other words, everything I normally do on my virtual deals from my Arizona home office. In that example, the Puerto Rico entity charges mainland entity $25,000 for those consulting services. Since mainland company had to pay $25,000 in consulting, it shows a break-even deal with no taxable income, and the Puerto Rico entity just earned $25,000 in consulting income at 4%. Now, if you think that's brilliant, leave a comment and say, Jerry, you're a flipping genius. But here's the thing. If you want to learn how to flip houses remotely without ever seeing the properties in person, I created a kit with everything that you need to find and flip your first or next house in the next 30 days. And I'm going to give that to you for free. Just go to virtualflipperkit.com to download that now. And if you're like me and you want to keep as much of your hard-earned money as you possibly can, especially as you start to climb the tax brackets, you may want to consider Puerto Rico Act 60. If you do, you can find me snorkeling on the beach. And if you're curious what it would be like to live in Puerto Rico with a big family, my wife and I decided to share our journey and adventures with you. We're starting a brand new YouTube channel called Family on Purpose. So be sure to subscribe to that and join us on our crazy journey, and I'll see you on the next video.